Welcome back to U.S. Farm Report. Trusted, timely, tradition.
Grain prices have seen a big pullback recently, leaving many farmers to wonder if this is a new plateau in the market. Michelle Rook joins us to look at what's behind the correction and if it's a short or long-term trend. Michelle?
The rally in the grain markets the last 2 years has been fueled by many factors, including production issues around the globe, the Black Sea War, and global economic concerns tied to inflation. So is this a major commodity reset or just a pullback in an otherwise bigger commodity supercycle? I talked to market experts to find out. Grain prices hit some historical highs in 2022, and old crop stocks remain tight in the U.S. and globally. But the market is now transitioning to new crop, with USDA estimating bigger supplies of soybeans and especially corn.
If we have a really big crop this year, there's no doubt our carryover could go from 1.3 billion to 2.3 billion. I mean, that's possible. Prices are going to go lower.
The funds, I think, have a mentality going back to this most recent USDA crop report that carryout's building. We're going to hit 181.5 bushel national average yield in corn and 52 on beans. We're transitioning to El Nino, and that means we're going to have perfect weather.
Currently, old crop prices for corn and beans are still higher than new crop, but for how long?
Break in the inverse, if you have it, is likely not happen until late this summer. So last half August, first half September, particularly as the September contract goes off the board. But it could be, it's potentially earlier if the crop continues to develop well.
So that could mean some volatile prices yet this summer. Besides higher production, the other change moving into the 23 crop season is the funds have moved out of commodities.
Now, with a fiscal policy that says we're going to create an environment where we can deflate values, they are selling. So yes, I think that the funds are going to move into other investments. I think it's going to take quite a story to attract them back into agriculture right now.
So does the reset in grain prices mean the bull market is over? Some analysts say this is just part of the typical supercycle pattern.
If you study all major bull markets in commodities and agriculture, they typically follow a 12-year cycle from start to finish. You initially get a 2-year rally up, which we did from 2020 mid-year to 2022 kind of mid-year. And then you typically have a 1.5-year correction, demand destruction, some supply improves.
So he says the current commodity reset is just the first wave of a longer bull market.
We believe we're nearing the end of a first reset in a super cycle 12-year bull market in commodities. This is the time that everyone believes that the last 2 years was a flash in the pan, that it was never, it's not going to continue. It's all over. And it really isn't. The problems that exist with supply and demand that created the rally to begin with haven't gone away.
However, it may not be the same type of reset we had in the past, most recently 2013, in part because of global export competition, especially from Brazil, which is aligning with China and has taken over as the top exporter of corn and soybeans.
We've gone from 105 to 110 million ton to 150 million ton crop. I mean, the numbers are staggering.
However, Nicholson says some of that export loss will be offset by stronger domestic demand with the growing population and the push to green fuels.
When we look at our 10-year baseline being very strong in the U.S. and think about a strong livestock market and strong demand for livestock products, also you see, particularly on the oilseed side, you see strong demand for crushed soybeans.
For soybeans, Nicholson estimates another 600 million bushels of crush capacity, which should keep prices supported long term.
When we look at a 75% probability on beans, we've got, kind of the bottom end as you get out to the end of this 10-year baseline, you're still above kind of around, the low end is around $14 for the national average farm gate price.
And corn will have to fight for acres, which will keep prices higher than historical averages and in the middle of trading ranges established in the mid-2000s.
Are we going back to $3 corn? No. Are we going back to low $4 corn? In our minds, no. We do see those prices staying good for the farmers. In this range that we established back in the mid-2000s, we're not going to move out of that range at this point. We may not be trading at the top end of that range. We may be trading more in the middle of that range.
Surprisingly, he says wheat has been the leader, with global stocks at the tightest levels since 2007-08.
You're going back multiple year lows here, and wheat stocks to use ratio has been coming down over a multi-year period too. So look for a lot of volatility in wheat.
And so wheat may also have to compete for acres with price.
That will put acres away from soybeans and corn both. So corn and soybeans have to maintain to try to keep their acres as well. So again, the acreage fight, if you have it, will still remain in place.
The one difference and concern is that input prices are much higher than commodity resets in the past, which could eat into profits. I'm Michelle Rook reporting for U.S. Farm Report.
Thanks, Michelle. Well, do this week's analysts agree? And how can farmers adjust? Arlen Suderman and Tommy Grisafi rejoin me next.